from the short commercial break, and this is Smart 24, where it's all about driving business and where we give you the best of business broadcasting, both locally and also globally. And this is Financial Markets with me, Julius Subuga, and it comes to you live every Monday to Friday, 10 to midday. And of course, my colleague Marcelino takes over at midday with lots and lots in Forex trading. And I'm taking you through what is happening in the world of the stock market right now as we speak, both locally and also globally. But beginning with the local performance of the stock market, right here with me is the Uganda Securities Exchange market snapshot, which gives us always an update on how the different publicly listed companies on the exchange are basically faring and their share prices. And well, having a look at other companies, including National Insurance Corporation, well, this is trading at about 5.10 shillings per share. And also looking at Nation Media Group, it is trading at 613.03 shillings per share. And well, all you need to know about these shares is that probably you just have to, the first thing you have to note is the share price at all times. And the second thing you have to note the trends in the share price, probably in the last few days, last few weeks, last few months. Then there you can be able to determine the market drivers, the market influencers probably, and then you will get a very good insight on the performance of that stock, and hence you can be able to make a very good investment decision. But nevertheless, we have stockbrokers that basically do help us with that, and you can just probably try to look around for a stockbroker that can basically advise you and also walk the journey with you of investing in stocks, because it's not really a game of just investing your money, but it should be a calculated risk, a risk that is worth the investment. And well, basically having a look at the other share, the other companies and how they are basically faring. You have New Vision Printing and Publishing Corporation Limited, and you can see there that its share price is at 150.00. That's the price. That's the price of a share in New Vision. Stanbic Bank Uganda is trading also at 25.06 shillings per share right now, and also you have Uganda Clay, the first company to be listed, also at 22.01. It has its share price at 22.01 shillings per share. And lastly, you have Umeme Limited. It has its share price at about 175.53 shillings per share. Just note that any of these companies here, you can basically try to just look out for any, and probably the culture starts with just looking through the newspapers, going to the business segment and trying to look out for any companies that are basically putting their balance sheets and also the financial statements generally in the papers. Probably try to follow up and how they're performing, and then over time you can gain insight on probably which companies you could basically invest in. But the stock market at all times is a very wonderful place to put your money. Every investment has a risk. It just depends on your homework and the background checks that probably you will have to make in order to invest in stocks. Well, looking at other global finance news and also stock news coming up, well, it is also important to note that March of much of the stock market, both probably locally not so much, but the local stock market is we should say at its infancy in Uganda. But Africa-wide, we have other really mature stock exchanges, probably securities exchanges, and well, they are basically, we should say, performing quite well. For example, the Nairobi Securities Exchange, it has over 60 companies listed there, and in Nigeria you have as many as over 100, and also in South Africa, Johannesburg Stock Exchange. But the global stock market, as is right now, it is going through some bit of it's being really affected by the Russia and the Ukraine conflict. And you can see how the global stock market can become volatile when it comes to events, global events happening all across the world. And it can be quite something many times to actually, it can be quite something, because investors themselves are human beings with a lot of feelings. They have anticipations, and they talk with each other, and they anticipate the future. So if the stock market is being affected by a global event, of course, you would be worried for your money, and thus you may want to first stop to invest. And yesterday we saw that Russian companies listed on European stock markets, many of them were in a stalemate, or probably were having a downward trend in their stock. And you saw that their share prices were going down. They were basically going down. And this indication only means that investors are pulling down, and probably they would want to hold on to their money until the situation gets better. But it's been volatile anyway. The weekend, we saw over the weekend that the markets were also down, most especially in Europe and USA. And on Monday yesterday, we saw that the USA stock markets, both the New York Stock Exchange and NASDAQ, were recording very good bounce backs from the weekend's downward trend of the stock market. But right here, as we speak right now, in our latest market news, most especially the global stock market, well, you can't separate the Ukraine, the Russia conflict. You can't separate those two from the stock market, because they are currently the two very much important things. So if you were basically to look at the determinant of this is the conflict, and the stock market is the culprit. And at all times, this basically has something to tell us about the global state of stability. Well, having a look at now latest market news, Asian shares, pharma as Ukraine market panic takes a breather. And that is it for that is it in Asia. And many of these indices also have been showing a bit of a bounce back as well, and positive results, except in Singapore and also in Hong Kong, as we saw yesterday. But it seems like they are basically getting back. And in Russia also, as we speak right now, the stock market in Russia is on a halt because of the ongoing conflicts. Because if you keep the markets open, most of the time it's riskier. It's riskier to keep the markets open and doing normal trading, because that can drastically impact on business and those companies listed on the stock market. Asian stocks regained some composure today as the massive selling that rocked financial markets after Russia's invasion of Ukraine last week paused for breath. While surging crude oil prices supported oil exporters in the region. So we can see some bit of light at the end of the tunnel, but it's not yet over. Probably going up, you can also see here that gas oil producer Neptune plans to score more carbon than it emits by 2030. It plans to store more carbon than it emits by 2030. That is probably in the U.S. markets. And in Japan, Japanese shares rise on bargain hunting, optimism for Russia-Ukraine talks. So, well, the Ukraine delegation also agreed to basically meet with the Russian delegation, and probably there was some bit of anticipation that the markets would basically get better, and investors probably gain more confidence. They gain more confidence with their money, and we saw that the markets were able to. Some of them have been able to bounce back from that sharp decline probably last week. So we can see over here that while we actually are also looking at a few commodities and how they are performing, you have commodities as well also on the market, and probably you see that Brent crude oil is basically gaining by about 1.92%, and last recorded at a price of about 99.85 US dollars. And also looking at gold. Gold is also a commodity, and it's also probably many of them are futures right here. Gold is basically gaining by about 0.23% and basically giving it a 1,500.80 US dollar price. And also copper right now, as we speak, is constantly at a price of about 767.50 as we speak right now. And probably soybeans, without even going so much into the details, soybeans is basically a commodity. It's an agricultural commodity, and we can see that on the global stock market, on the global market news, is basically one of those, and it's basically gained by about 2.075%, bringing it to a value of about 1,878.25. Probably when you look at the currencies right here, the euro against the US dollar has lost by about 0.22%, and the Great Britain pound against the dollar, well, you can see there that it's lost by about 0.04%, and the Japanese yen against the dollar has lost about 0.07%, and the Chinese yen against the dollar has lost by about 0.04% as well. Looking at rates and bonds, when you actually want to buy into a US 10-year bond, well, you may want to know that it has basically had an upward trend and an increase of about 0.02 change in the points. And the yield probably is about 1.859 $1.859. And the Denmark 10-year bond basically is down by about 0.04%, and the yield is 0.109. In the UK, you have the 10-year bond. The 10-year bond gained by about 0.029% as we speak, bringing it to about 1.439 pounds as yield. The Japanese yen, also the 10-year bond for Japan bond, government bond, is basically losing by about 0.005 points, and bring it to a yield of about 0.179. And that is the bond just right over here. So these are basically examples of just an overview of the rates and bonds. And just recall that rates and bonds as well, bonds are always more of like a date that you basically lend to government, and probably government can give you a yield later on in the future, probably about 10 years. It's more of a long-term date given to that you will give to government, and then probably government will pay you basically back after some after given period of time, and most especially many of them between 5 and 10 years. And the treasury bill is basically a shorter term loan that you give to bank to the Bank of Uganda, or probably the government, and probably you have a return on your investment after a given amount of time. Okay, so looking at also other news, from sanctions to Bitcoin donations, here's how crypto is playing a major role in the Ukraine war. Well, cryptocurrencies, many of us have basically invested in them, and well, it is said that it is the future of money, but we'll have a look at that probably. We'll have a look at that as well. So Bitcoin is a form of blockchain as well, and is one that is well, it's not really so much regulated all across the globe yet in so many countries, but it is one of those future forces that you may call inevitable. At any one point in time, it may have to catch up with us, or probably with you. So looking at the headlines over here, we can see that Bitcoin, Ether, and other digital assets have become an essential part of the Ukraine war. And other headlines include Ukraine has raised $22 million US dollars through thousands of crypto donations since the start of the war. And also crypto exchanges, enthusiasts, and even Western countries are looking to crypto to support Ukraine. And get the inside scoop on what the traders are talking about just right here. But we won't go into the details, but just understand that there are donations in terms of cryptocurrencies to Ukraine coming in. And many of the support for Ukraine is coming in from the United States, from European Union, and many other blocs and also countries. So it is very much important to know. Well, let's now have a look at even more and more news. Well, we can basically have a look at, yes. So now here we have this, Russia's central bank has closed the country's stock market and instructed brokers to block foreign sales as losses mount. Yes, so I think this was a wise thing to do, and I think closing the Russian stock market will be much more of a necessary evil than leaving it basically open. And so it the country stock market, and you know, it was closed. And also yesterday we saw that many Russian companies in Europe have by far, their shares have plunged, and we can see lost a lot of value in this. And so these are what we call the determinants of you know, the market drivers. Global events are market drivers as well, so they should always be incorporated when probably making investment decisions. Well, looking at the Russia's central bank closed the stock market on Monday, yesterday, in a bid to stem a sharp decline. And the central bank also instructed brokers to not execute sell orders for foreign investors. So you see that. Central bank also instructed brokers to not execute sell orders from foreign investors. That was an order from the central bank. And Russia's ruble plunged more than 20% yesterday after devastating sanctions from Western countries. So you can see here that there is a lot of stock market loss of more than 20%. Get the inside scoop just right here. And of course, this is with the help of Business Insider. And we are basically looking at the few headlines. And so you can see that a lot of these markets are influenced by what is happening most of the time around us. And it is very important to basically not to miss that as an investor. At any one point in time, you're making an investment decision. The political stability of a country is always very much important to put into consideration because it can easily catch up with you. So US, right here, as probably I can see US stocks missed as investors. They just increased sanctions against Russia while initial Ukraine talks end with little progress. And so with that, basically, we may actually see a lot more volatility in the market in the next few days, just like we saw in the US-China war in 2019 at its peak. And so right here, it is a very important issue. So if we may probably go up, my colleague will help me with that. US stocks ended mixed on Monday yesterday as investors digested ramped up sanctions against Russia, and also initial peace talks showed little progress. And so, well, this leaves us with this leaves investors most of the time wondering how to go about the situation. But most times it's just about anticipations and probably predictions, and that is why probably we may see a lot of mixed feelings. There are so many mixed feelings. Whereas the other prominent investor may invest, the other one may not really wish to invest. And so these are times like that. Western countries in Europe and the US announced sanctions against Russian banks designed to cripple the country's economy. And well, while these sanctions are put on Russia, well, it is a much more easier way to basically punish a country because, I mean, by all means, you have to do something about that kind of situation. And of course, a conflict like this is not what we want in times as these, most especially when many countries are recovering. And also, we saw yesterday that many of, much of the food supply chain in Africa, the oil supply chain in Africa was basically disrupted also. Somehow, to some level, though you and I may not feel it right now, right here, but many parts of Africa, the supply chain is basically somehow crippled in a way. And U.S. indices, we're going to be looking at now the U.S. indices and how they're also basically faring, including the S&P 500, the Dow Jones Industrial Average, the Nasdaq, talk about the Nikkei, talk about the DAX in German, and of course lots more other global stock markets and how they're basically performing, including Singapore, and also Hang Seng in Hong Kong, and Shanghai index, and so much more. But we shall basically have a look at this in basically a few minutes after this top of the hour commercial break. And I'm going to be right back with the real, now we're going to be looking at the indices all across the globe, the Dow Jones, the S&P 500, the commodities in details, and of course, much more.